So which is it? Are markets really seeing around the corner, seeing things we might not see, or are they just wishing themselves to success? Because we do have conflicting signals going on here.
We have completely conflicting signals. And you know what? Just a couple of minutes before I came on air, I was checking my Twitter account. So we have Donald Trump saying, stock market reaches new all-time high, exclamation mark, of course. Joe Biden saying, to everyone who is struggling, I promise you help is on the way. And that really captures this tale of two cities, that you have the stock market going absolutely wild on the prospect of not just the hopes of a vaccine coming in next year and unleashing an economic boom, a bit like the roaring 20s after the last great pandemic, but also the fact that that's coinciding with a lot of stimulus, not just the fiscal stimulus that everyone's discussing in Congress right now, but also the incredible amount of monetary stimulus that's out there already. And you put those two things together and you can see further down the track the prospect of quite a big rebound next year. The problem, though, of course, is that right now, as President-elect Joe Biden knows and was talking about today, you have a lot of economic pain in America, particularly amongst people who do not own equities and do not have assets who are seeing the fruits of this boom. And that is the real tension. I mean, the jobless numbers today were pretty poor. And so that is going to be weighing heavily. And the big question for the administration is, how can they help alleviate the short-term pain without unleashing potentially a destabilizing recovery next year that could actually pave the way for inflation?
Gillian, as you say, the jobs numbers we got this week were disappointing. They were below what we thought. There's a slowdown in the growth of jobs. And that's before, really, we have a lot of the shutdowns that are being done right now and are about to come. That was as of the middle of November, those numbers were for. The question in part is, if we are having a bridge to this brighter day that we believe is coming with the vaccine sometime in the middle of next year, can we do real fundamental damage to the economy, maybe irreparable damage, in the meantime?
Well, there's been a lot of hope amongst policymakers that the economy was like a laptop. And we all almost unconsciously borrow the laptop metaphor to describe what's happening, because we're so used to this idea if something goes wrong with our laptop or our phone, we simply just switch it off, reboot it, and it starts up again identically. And that's been the metaphor a lot of people have wrongly borrowed, including the government, to describe what was going on. The reality is that actually, since our economy, laptop, has been switched off, all kinds of damage has been done to the software, and that just is not going to be able to be reversed quickly. There's good things happening as well in terms of the digital penetration, and that's a lot of what the things that the stock market is celebrating right now, the fact that tech has become so deeply embedded and accelerated in terms of transformation in the business community. But certainly there is a lot of pain. I think the Biden administration is going to try and alleviate the pain through short-term fiscal support, through essentially providing payments to households in America and hoping that the vaccine come through fast enough to try and reignite animal spirits early next year. And I personally think there's a good chance that will happen. But the timing challenges right now are very tricky. And they would have been tricky even if we weren't in the middle of a presidential transition. The fact that we are, and the fact there's so much obstacles to creating a smooth transition, is going to make the question of timing for the next 6 months truly fascinating to watch as a journalist and a bit of a nightmare to navigate as an investor.
Gillian, you wisely say it's not just the next 6 months, but it's the longer term. When you talk about digital penetration, that's likely to stay with us a lot longer than 6 months. You had a fascinating column in the Financial Times this week talking about globalization as well, that a lot of people have sort of almost counted out, saying really it's on the decline given what's happened. By the way, that was happening even before the pandemic hit. But your column suggested, no, it's not that simple.
Well, one of the things that really irritates me is people say, we're seeing the death of globalization, or I hate globalization. That's been a big mantra of politicians and voters for a lot of the last couple of years. And the reality is that that G word isn't just one thing. There's actually at least 4 things you're talking about with that word: the movement of people, money, goods, and ideas. And if you break them down, as a report from NYU Stern Business School and DHL has done this week, and it's a fascinating chart, it's one of my favorite economic metrics to watch. If you break that down, what you can see is actually trade globalization has been flatlining and falling slightly for the last few years because of protectionism, US-China trade war. Money has followed a similar pattern after 2008. The people aspect was rising until, of course, this year it's collapsed because of the lockdown. The really important thing that everyone ignores when they talk about globalization usually is ideas and information. That has exploded, and it was exploding even before the pandemic. But what's interesting is in 2020, the movement of ideas and information has accelerated. That's one reason we actually have the vaccine coming along, because of all this cross-border swapping of ideas. It's the reason I'm talking to you right now, David. And I think that combined with what I do think is a chance of a rebound next year is going to actually put globalization back into favor, or at least give it more legs next year. Yes, this year the index shows it's fallen back, no surprise. But actually, I think anyone who's talking about the death of globalization is probably wrong. And you should ask them, if you hear that word, which one do you mean? Because if you're talking about the death of globalization or you're reading about it online, you're actually taking part in globalization without even necessarily recognizing it.
To reduce it down further than we can, in a word, is data the new oil?
I think data is certainly one of the things that the new oil, and the question who controls it, understands it, and manages to leverage off it is going to be a winner.